Hey everybody, Luke here from Juice Capital as always. Now I'm going to give you guys a quick recap on EURUSD. I know it's a slightly different type of video, but at least you get a sense of how I trade. But I want to start doing these quite regularly, but let me know what you think. If you have any issues, concerns or questions, make sure you drop me a message on either Telegram or Instagram, whatever social media platform you like, and I'll respond to you as soon as I can. However, without further ado, let's jump into it. So as you can see here on EURUSD, you can see the overall structure seems pretty bearish. However, in terms of ranges, we are now in a bullish range. As you can see here, this is viewed as a lower high to me. It may not be viewed as a lower high to you, but again, everyone trades differently. So if you're interested in how I trade, make sure you definitely head over to our website. Now, as you can see here, we've taken out a lower high, we've broken structure. So obviously from this point, because we haven't really confirmed the bullish order flow just yet, we are now pretty much entering into a potential bullish market. However, we obviously need to see a further break in structure to confirm that order flow. However, we do have a bullish intent, so this can be viewed as a chalk. If we just go onto the H4, you can see structure a bit more clearer. Now, I don't really use the H4 and daily so much these days, as you can either trade the higher time frame or lower time frame. Is completely subjective and up to you. However, I like to look at the lower time frame trades, especially during learner session, as I like to try and be in trades sort of not too long. I'm much more of an intraday trader obviously, but I don't like to be in trades for too long. Now obviously this is much more of a forecast. We can see here that okay, prices respecting supply, blah blah. However, obviously we've broken structure above here, and you can just see it much more clearer than the daily. Now if we just go down to the 5-minute time frame and just look at the Asian session, because the way I trade, obviously I'm a London trader and I look at pretty much what prices previously do in an Asian session, and there is a little, I suppose you could say, strategy, system, whatever you want to call it, that I personally look for every day, and it is primarily using the Asian session into the London session, and it depends on obviously the sweeps, the highs and lows, vice versa, and I'll show you in a minute. You guys probably already guessed it, but yeah, what I'm going to do is I'm just going to let price play out over these next couple of seconds and just see where we sort of break out. So we've already started to test the lows. You can see we're starting to reject it, but we came back down and tested it again. Now, as you can see, we had a strong wick below to the downside. This indicates that we're sweeping the Asia lows, so any liquidity that was under here is now being cleared. Now, from this point onwards, I'm pretty bullish. Right, I want to buy. So what I'll be looking at is, because we swept the Asia lows, is I'm going to actually look for a 5-minute or 1-minute time frame, 5-minute time frame, completely subjective and up to you. But I'm going to be looking for that change of character to the upside on a lower time frame to obviously respect the higher time frame sort of structural bias. So I'm just going to let price play out over these next sort of few seconds. I'm just going to see what price does. Okay, now from this point, as you can see, it sort of looks like the daily time frame. I view this as a lower high, and we've obviously just closed above it. So from this point onwards, we can go ahead and view that as a chalk. And in terms of order blocks or supply and demand zones, whatever you want to call them, similar things to my eyes. You can see here that we have a nice valid demand zone. So obviously from this point onwards, the obvious thing to do would be for price to wait to pull back. However, I'm just going to go on a 1-minute time frame and just see if I can just try and make those minor refinements. As you can see here, I've made that minor refinement, and also lines up with the overall 50% of this imbalance in price. So we just make this a bit more clearer. Now what I'll be looking at is for simply prices just tap into this sort of demand area, but also I'm going to mark this as our high, as that is where I'd personally look to target, and if we can break above that and continue bullish, great, we've confirmed the bullish order flow. So if we just let price play out over these next few seconds, and at this point as well, I do have a sort of a buy order on here, in which I'll be looking, obviously targets will be dependable. The way I use my targets, I don't really have a predetermined target. Obviously I utilize the higher time frame analysis and see which way we could go, but as I'm trading a lower time frame, like I said, I want to try and be in and out of trades during the learning session. So I'm just going to try and catch that London momentum. So the obvious thing to do would obviously be have our stops below the zone. So a nice 1.7 pip stop. When you factor in spreads, that's more than enough, especially on your dollars. It's a very liquid pair. So if we just go ahead and just sort of drag that over there for now. And again, I'm going to be anticipating a breakout structure above this high. So what I can do is go ahead and question mark it. And again, if we break above the high, then great. We can go on to the higher time frame and just sort of manage it on the 5-minute. So we'll just let price play out. Now at this point, if you entered based on a buy limit, you are already in a trade. However, if you would like to look for any sort of bullish confirmation or a bullish candle, then you will be in a trade based off whatever bullish candle you choose to buy from, whatever. But as you can see here, we are now in a trade, so we can just go ahead and drag it to where price tapped into it, which would be here. We had a tiny little bit of drawdown, but again, in terms of spread, that is a pretty big 1.1 pips. We have plenty room Now if we just go back to the, well actually we just manage it on the 1 minute for now and just see what price does. See if we can respect this. Okay, so we've already broken above it. No, we haven't. We wicked above it. Again, there's 3 different type of breaker structures. It's up to you and how you choose or view your breaker structures. But for me, I like to use the, I map it out using a wick and look for the candle closure, and that would be a valid breaker structure to me. Now at this point, as you can see, price did break structure. So what we can do is just go ahead and remove the question mark. And at this point, as we're talking out a 5 minute high as well, I'm going to look to try and manage the trade on a 5 minute time frame. And this is how you can sort of scale out your trades from the 1 minute to the 5 minute to the 50 minute. And eventually that lower time frame trade of a 1.7 pip stop will eventually turn into a higher time frame sort of swing trade, right? And there's many ways you can do that. But again, I'm not trading based off higher time frame POIs. I'm just trading structure. Right, I'm just on the right side of the structure. But what I'm going to do is to keep things simple, as again, like I said, I want to try and be in and out of the trade during London, is I'm going to just try and sort of manage the trade. And the minute that we break against us, that's the minute when I want to be closing the trade. Because obviously, we confirmed a bullish order flow right now. Again, we still have to factor in things like supply and demand zones, and expect that price can come back to that, down to these zones. So again, how you manage the trade is completely up to you. But what I'm going to do is I'm just going to let price play out over these next sort of few minutes, whatever. As you can see here, we have tapped into this imbalance. So this zone could be something that will come back and test later on down the line. But as of right now, you can go ahead and manage your stops and trail your stops quite aggressively, if that's something for you. As you can see, there's plenty of scaling opportunities. So if you wanted to, for example, buy from this 5 minute demand zone, then you can do so because it presented itself with that scaling opportunity. But we'll just go ahead and look at what price is doing now. So as you can see, we've broken above this 5 minute high. All right, this is a 5 minute high as well, so we could have scaled out straight away, but this is still a 5 minute high. Broken above there, created a high here, so obviously that's a breaker structure. And in terms of lows, this is our low here, but we continued bullish. We've broken the structure again to the upside, so that's our new high. This is our new low. Obviously, in terms of last point of demand, in terms of this 5 minute range, this is it. So I'd be looking for a long opportunity there if you were to scale in. Now obviously we have this low here. We haven't really created a swing point yet, so we can't say where our high is just yet. We seem to be breaking bearish here, but again, as long as we're staying within this range and we're not breaking below this low here, we are still classed as bullish. Because remember, it's all about your ranges. If you can try and understand structure and can, sort of combine it with your understanding your ranges, it's very powerful. Obviously, if you have the understanding of, I guess you could say, supply and demand zones. But as you can see here as well, we have just broken above another high. So at this point, again, we're still in this trade because what we're going to be doing is we're just going to manage this trade until eventually we close the trade when the market starts to trade against us. So like I said, if you want to hit a 100R trade, a 50R trade, 30R trade, these is how you can do it, because you're managing it on the time frames, you're scaling out the time frames, and you got to ask yourself, what if obviously price continued bullish and bullish and bullish and never actually broken bearish? This trade here could turn into a 50R trade, and that's how the big trades do come. I go much more in depth on that on my course, so make sure you definitely look at that. And obviously at this point we have a new low, which is here, but we don't have a swing point just yet. As we need to see a pullback. And there's plenty of scaling opportunities, especially in a 1 minute time frame, which you could look to capitalize on. But yeah, I just prefer to manage it on a 5 minute personally. We'll just see what price does. We seem to be creating a sort of range here, so this is something quite important to look at. So we sort of create a range here. We've broken above this high here, so we can go ahead and class that as our breaker structure. And now at this point, we have a new low, and again, we haven't really confirmed our higher price yet, just because we haven't created a swing point. And when you see like such a dominant bullish market, it's all out there, and obviously in terms of retail logic, you're going to look at that and you think, okay, price is moving to the upside, I want to be in on this trade, I want to buy, I want to add to position, I want to capitalize on this move. And the more and more that it becomes public, it's like the old school saying that it goes, buy the rumor, sell the news. And it's sort of true in the currency market as well in terms of retail logic, because you got to think, so many people are going to be buying, so it's just going to be generating liquidity for price, obviously, potentially reversed. So that's why it's important to trade with the structure. But yeah, I'll touch up on that maybe in a different video. Let me know what you guys think. But if we just go back to the 5 minute time frame, just look to see where price actually started to turn around, because eventually it will. But like I said, in order to get this big trade, you only do it just by simply like, if price continued bullish and bullish and bullish, then eventually it will obviously reverse. And that's how you get the bigger trade. As you can see here, we're still bullish order flow, we're still in the trade, and we're just going to wait for price to I guess take us out. Now, as you can see, price obviously at this point has closed below the previous higher low. So, you know, what is the logical thing to do? You know, we want to exit out the trade, we want to get out of the trade. The reason why we want to get out of the trade is because, again, the structure trading against us. So we know that potentially, because we've taken a higher low, that we can potentially continue bearish for the rest of that, you know, day. And like I said, I'm not going to be in trades for long. I want to be in and out, and you know, that is more than enough in terms of risk to reward for me. You can see that's a 14.76% trade right there, and that's more than enough. That's brilliant, right? But if you just look at the time and length of this, could I do with this one? If you just look at the time and length of actually being in this trade, you can see that it only took around 3 hours and 40 minutes, and you've made 14, you know, just under 50 now on your account. So it is possible, it is out there. You just got to train your eyes to see it. Like I said, you know, this is just a brilliant trade. I'm more than happy with taking 3%, 4%, 5%. You know, just because you see people hit these 30 or 40 or 50 or trades online, it doesn't actually mean that it's, you know, so possible every single day as they make it out to be. But you know, I'm not going to touch up on that today. I touch up on it in my course in the ranting section. If that's something you're interested in watching, make sure you check it out. But other than that, yeah, that's a pretty decent trade. You just, you know, enter the trade based on a 1 minute refined order block from a 5 minute, and we just obviously caught the momentum at the right time. We managed to trade in terms of structure, and obviously this is a high, this is a low, price taking out the low, so the only logical thing to do is to close the trade right there, and that was a nice 14.76%. And but other than that, I'm going to end the video here. You know, I don't want to drag on the video too long. You know, we're past the 10-minute mark now at this point. So you know, I don't want to be recording myself too long, because I don't want to, you know, I feel like if you do 30-minute long videos on a trade recap, you're just going to fall asleep an hour long video, right? So yeah, 10-15 minute video, that's all they need. Hopefully you're getting some value from this, and let me know what you guys think, and I'll look to do more of these if you guys enjoyed it. Let's just see how this video does, and I'll do plenty more of them. But yeah, I do much more in-depth case studies obviously in the course, but what you got to remember as well is there's a couple of things that, you know, I didn't want to show on the video, as that's exclusively to the members. But yeah, you already know what to do. Other than that, guys, appreciate you watching, and I'll catch you on the next video. Let me know what you guys want to see. If there's any questions, concerns, whatever issues, make sure you drop me a DM on Instagram, and I'll respond to you as soon as I can. Appreciate you guys. Thank you for watching.